Well, hi, everyone. My name is Emmalyn Shaw. I am the co-founder and co-managing partner of Flourish Ventures. We're an $850 million early-stage global fintech fund, and we back investments that transform financial services for consumers and businesses alike. We invest across all facets of fintech, and portfolio companies include Alloy, Chime, Clerky, Mantle, Skipify, Swap, Unit, and many, many others. Today, we're so excited to really just dig into what we think is an exciting part of payments, which is really digital wallets. Now, digital wallets represent $15 trillion globally in terms of transaction volume, and it's only scheduled to nearly double by 2027 to $25 trillion. And really that understates, if you think about e-commerce and digital wallets and transaction volume, it's highly understood in terms of the potential. 70% of consumers drop off and don't even complete a checkout. And that's in part due to a number of things I think we all can experience and can attest to, right? Very suboptimal payment experiences, cumbersome checkout flows, terrible UI, customer support, and the like. And these are just a few opportunities for financial services companies and merchants to change that, to improve retention, to drive performance, and ultimately to drive revenue, right? That's what we're here for, and I think that's what they're here for. I have had the privilege of working as a venture capitalist for over 23 years. And for me, my greatest passion in doing so is working with visionaries who take financial services, who take technology and actually leverage it to be able to drive significant impact. Now, some people think that this only happens among fintech leaders and tech leaders and startups, but it also happens within incumbents. You find folks that are remaining at the cutting edge that really want to drive and be part of solutions in the future. So I am incredibly honored to share the stage with two thought leaders of such type. They're going to share with us their perspectives on, the current trends and the impact that will have on payments industry writ large. So with that, I'll start by introducing Mark Nelsen. He is Visa's SVP of Consumer Payment Products. He's responsible for leading Visa's strategy across all of open banking capabilities globally. His focus spans across new technology, new products, core management, and optimization. And this is really with an eye towards addressing the needs of merchants, acquirers, and financial institutions. And then secondly, one of my favorites, I'd love to introduce Ryth Martin, the CEO. He's the founder of Skipify, and he really founded this to streamline and massively transform the checkout process, right? To eliminate all the silos, to unify merchants, shoppers, and FI at the point of purchase. Now, that being said, look, they have become and are the leader in digital wallets. They've raised over $70 million. And I think their partners can certainly be good proof of that. Partners include Amex, Synchrony, Samsung, WorldPay, and most recently Visa. So thank you guys so much for joining. So excited to have you. Let's dig in. You guys ready? Please. All right, Mark, let's start with you. Right. You've been at Visa for 18 years. It's a long time, guys. 18 years. And you've overseen a wide range of products.
Yeah.
So Visa's always been at the forefront of innovation. Tell us, what do you see as the next set of waves in the industry?
Yeah, thank you for having me here. It's great to be on stage with you and Ryth. I would say if I look back 10 years, maybe the last wave of innovation that I think we got right in some of our mature markets was mobile payments. Because back in 2010, when mobile payments were starting to be on the topic, most people thought that the mobile network operators were going to win the mobile payment space. And so they had a secure element and they were going to charge money to put a credential on a secure element. And so that was what it was on everyone's mind. And then we partnered with Apple, since Apple was referenced earlier, we partnered with Apple and said, why don't you use our existing ecosystem of millions of merchants, hundreds of millions of merchants. You can tap into that and you can create the best UX on your technology. We'll give you some new technology to enable this. And that has created, 2014 is when we launched Apple Pay. For the last 10 years, the world has been deploying that tap to phone, that tap to pay technology. And that's been a great wave for us. And if I look at kind of current ways for e-commerce and digital, I think about optimization of conversion. Because e-commerce started, in the late 90s, mid 90s, and it was first grow at all cost. And that lasted for 15 years. And then finally people said, maybe security and fraud matter because consumers are getting annoyed with having to replace their card every 15 months because some data breach had happened. So there was a little bit of a focus on security and fraud. But now there still is a big gap between what we see for a face-to-face transaction versus a digital transaction. So in the face-to-face world, if you use your card or phone at the point of sale, we'll see 99% approval rates. But we don't see that approval rate still for e-commerce. It's still, depending on the market, it can be 7% lower, and sometimes it's even significantly lower. And so there's a big gap between face-to-face and e-commerce, and that gap is what we would call conversion. And that is what companies like Skipify are focused on, is how do we fix that conversion gap? Because there's no reason technically why those transactions shouldn't be going through, but it's a combination of just there's complexity in routing. There's like concerns still with consumers and issuers with fraud rates. And so this optimization of conversion is the biggest trend right now. And I feel like, a lot of people will come and see me, a lot of fintechs, and this has been the topic for the last 2 years. But we partner with Skipify because we do feel like they've done the best in terms of putting together the building blocks to truly enable that best UX and best conversion rate. So, yeah.
Super helpful. Look, we've been talking about conversion since the launch of e-commerce. There's been a lot of tech innovation since then. I'm not really sure why we're still having this problem, but it still is.
Still having it.
Yeah. So tell us, why is it so hard? What's so hard about optimizing conversion, and why is it such a difficulty for merchants today?
Yeah, I think, you mentioned this problem existing since the start of the internet, particularly for card not present transactions, right? And so I think part of the reason for that is if you look at the user experiences for purchasing online right now, in a lot of cases, they are still very similar to the experiences that happened at the start of the internet. We're still asking for manual form field entry. We're still asking for the direct entry of 16-digit credit card, debit card, PAN numbers. The reality is those experiences just don't convert well. They just don't, right? But good news, hey, there's a Gen 1 of digital wallets that merchants can use. There's the Apple Pays of the world. And so if you're a merchant, you can say, okay, well, hey, let's use Apple Pay, right? And Apple's got 70% of the device share in the United States, and roughly 30% of people with an iOS device are going to use Apple Pay consistently, right? So if you're a merchant, good news, you got 30% of 70, which is roughly 21% of your funnel, and maybe it's a little bit more, but let's just say can have a higher conversion rate because of the use of those technologies. Awesome. Well, then let's plug in another, call it Gen 1 digital wallet in PayPal, right? If you go to any large merchant and ask, well, what percentage of your customers are using that product? It's going to be around 5-ish%, maybe a little less if you're a large merchant, maybe a little more if you're a smaller merchant. Well, okay, well, that's not even half of the merchant's funnel, right? Even if those products increase their reach by 50%, and in aggregate, those two products together are almost 40 years old, right? And so if you increase their scope and their reach by 50%, it's still not even half of the merchant's checkout experience, right? And that is the conversion problem for merchants. You have your core technology, which is frankly not to par with the rest of the experiences offered in the market. And that is the opportunity, right? If you ask any merchant right now, their core checkout technology is not the same user experiences of these digital wallets. And that's the next wave. Yep. How do we take biometrics? How do we take device ID? How do we take the ability to take an email address lookup or some of these other experiences and instantly access cards in a way that's secure and accessible, that has high authorization rates? How does that become the merchant's core experience increasingly and not offered through these other kind of ancillary experiences? Yeah.
Now, you guys have both mentioned some really important waves, and it's taken a while to come to fruition. Having been an investor for a very long time, I've always marveled at how long it's taken. But I'm curious, Mark, how should we capitalize on some of these waves as we think about it in the audience and as we think about tech investors, but more importantly, tech companies?
I mean, I think fintechs have such an amazing opportunity here. And I think back of Satya Nadella spoke at our leadership team back in October, and he talked about waves of innovation. And he talked about some of the waves that Microsoft had missed, like mobile. They largely missed it, and they tried everything they could to catch up, but they didn't catch it. And so he then talked about how they saw Gen AI being a huge wave, and they did everything they could to make sure they could catch it. And they've done a really amazing job. But the point was, these waves of innovation, you have to catch. And if you don't catch it, it's really hard to be relevant, at least organically. And I think the challenge that a lot of our largest clients have in the ecosystem is they've been around for 30 years. So they have 30 years of tech debt. Sometimes they have multiple platforms because they've acquired companies. And so it's not uncommon to see 40 to 50% of a tech budget just refactoring what they have. And so their innovation budget is just small.
Yeah.
And so it's not easy to introduce all of this amazing technology around conversion when you have such a limited amount of time spent on innovation.
Yep.
But that's where the fintechs come in, because you don't have 30 years of tech debt. You have the ability to create anything using the newest technology, the newest ways of thinking to say, how am I going to combine the best of both worlds so that I can introduce something to a merchant that can actually start to use it? Yeah. But it's hard to do. Yeah. Like you guys know, because you've been doing this for a while.
Well, I feel like you're going into my next set of questions. I mean, as a seed investor for Skipify, I've been fortunate to watch this relationship evolve behind the scenes. Yep. But I'm excited that you guys just recently announced the public partnership. So give us a sense, give the audience a sense, what is this partnership about?
Yeah, so we just announced last week our partnership. There's been just a great response in the market so far, I think, for both sides. And our teams have been working together for months. Mm-hmm. And I'll share a little bit more about the tech that we're co-creating. But before that, I think that the reason, in my opinion, our teams work so well together is I think our teams each have independently a very similar view of where the market is going, what this next wave, particularly of digital wallets that increased conversion, is going to look like. And so I think what's been really amazing to see is if you think about Mark setting that agenda for his team and operating from this angle of, hey, let's activate all of this for thousands of financial institutions and banks that are all then going to move this way. And a lot of those groups do have significant tech debt, and it's hard for them to move. Well, guess what? Good news. Mark has been paddling to catch that wave on your behalf for years to reduce the activation threshold and effort for all those financial institutions. Okay, well then on Skipify's side, we can look at all of what they've built. You can view all that technology as protocols or products on the Visa side, or you can view it as a platform that you can then build on top of. And that's exactly what we've done. We've looked at Click to Pay, Cloud Token Framework as some of these other technologies that then we can couple our digital wallet on top of. And then what happens is pretty magic, right? Is you have then massive access to cards in a way that is incredible from a user experience for the end user. Then you couple that into Skipify's high-performing digital wallet that's got close to 100% uptime and sub 1 second latency and great conversion rate for merchants. And on the authorization rate increase side, we are seeing merchants go from 92 to 98 or 99% authorization rate using Skipify. We are seeing authorization rates, to Mark's point, that get close to mirroring card present authorization rates, but it's in a card not present wallet, right? And so you'll see more, I think, between our teams here, but that's high level what we've been working on. How do we take this conversion problem for the merchant and help it go away, frankly? Yep.
So Mark, there are many levers, as we all know, that merchants can pull to optimize conversion. And given the number of options, why this one and why now?
I think it goes back to the things take a long time to get to maturity in payments. And there's a quote that we use at Visa is a science fiction author, William Gibson, who said, the future is here, it's just not evenly distributed. If I go back to like Apple Pay launched 10 years ago, but we still, after 10 years, don't have Apple Pay in every market in the world. Yep. It's their future, it's not relevant today. But tokenization is one of those underlying technologies that you guys are using because it's proven to help improve conversion rates. But tokenization we developed 10 years ago, and we now have deployed it around the world. It took us 10 years, but every issuer, every country in the world now can support tokenization. So now merchants can say, hey, Visa, can you give me the best credential for this consumer that's going to give the best conversion rate? Yep. And so we now are at a tipping point where like the ecosystem is enabled. Yep. So every merchant can now start to take advantage of this as long as they put the right building blocks together. Yep. But it takes so long for these things to get to maturity, but now we're at the point.
Ryth, anything else you want to add there?
I would just say I think that we see it basically the same way. The term we use internally is activation threshold. What is it? What are the components what are the sufficient and necessary components that need to be combined so that you get the outcome that you want? And so what I would say is that we're at the activation threshold for this market to be able to start to capitalize on this. We have now the technology available. Mm-hmm. And it's taken, an amazing amount of time and effort and energy from the Visa team to create these technologies. We can now couple those into the right front-end digital wallet that's easy for the merchant to integrate, that looks and feels like it's part of their experience, right? And then, oh, by the way, the authorization rate is spectacular. And now what we're seeing as a company is we have the proof and the evidence of that, right? And so I'll give you a couple examples. For most merchants, we can increase their conversion rate, their authorization rate by 600 bips at a minimum, right? 6% at a minimum, from 92 to 98%.
Yeah.
If you're a merchant that's doing $100 million online, if you think about the activation threshold, a year and a half ago, Skipify had 0% reach in the United States because we're a startup and we're growing. We've gone from 0% to 3 to 6 to 9 to 12 to 19%. We are now approaching 30% reach in the United States, right? And we'll have that in the next 90, 120 days. So if you're a merchant that's doing $100 million in GMV and we can do a 6% lift for roughly a third of your customers, well, that's close to $1.8, $2 million in incremental GMV, right? And that didn't exist a year and a half ago, but it exists now. And so the reason why that's relevant, frankly, is, okay, if you're a merchant and you're going to prioritize any of your decisions of what you could do next based on the likelihood of outcome, we now have the technology coming together to make this happen. And we have the proof, we have the results to be able to say, here's how it's going to work for you. And then as a merchant, it becomes real, right? We've started to cross that chasm. We're not there yet. There's still lots of work we need to do, lots and lots of work, and that work's not going to stop. But we're in a place where we are reaching that activation threshold. The reach of consumers is large enough. The proof is large enough. Now we just need to keep growing it. Yep.
Thanks, Ryth.
Yeah.
So, Mark, you and Skipify have done an incredible job, really building positioning the product for the entire ecosystem to win, right? And I think that's incredibly difficult to do, and it's a testament to you and the partnership. There are a lot of banks and financial institutions here in this audience. What advice would you give them? How do they stay abreast? How do they ride the wave? What do they need to do to take advantage of this?
Yeah, that's a good question. I think for banks, what they're going to have to realize now is that in this model, when we move into this world where we have these optimization engines, think of these like Gen AI co-pilots that are behind the scenes trying to figure out what's the best way to get conversion for this merchant. If you're a consumer and you have multiple card credentials on file, the Gen AI engines like Skipify, they're going to pick the best credential for you. And so in other words, like if you're not performing the best, you're not going to be picked by these engines, which today, that's not a reality. The consumer still largely goes in and picks maybe from a wallet, I want to use this credential. But going forward, you can see that slowly starts to go away. The engines are going to pick it for you based on what's going to give you best conversion. But so banks need to start to think about conversion from truly a competitive perspective. And I think one thing that I would love to see with banks is historically, oftentimes the consumer business doesn't work and they don't have the same aligned goals with the risk department. So the risk department will be said, okay, I need to maximize my fraud detection. So I'm going to decline X number of transactions so I have the lowest fraud rates. So if you're a bank and you're looking at your benchmarks and you're pounding yourself in the chest by having the lowest fraud rates, you probably also have the lowest conversion rate also, because this is kind of how the math works. Yep. And so what you want to start to do is say, how do I have the best conversion rate? So what's my benchmark? Look at my benchmark, my peers. Do I have the best conversion rate? Because if you have the highest conversion rate, you likely also have the lowest fraud rate. It's almost counterintuitive, but that's just how the math works. And so, but banks often don't look at their business this way. And so the best thing banks can do is really, truly get together with your risk department, come up with aligned goals that are focused on conversion. And you should be comparing yourself with your peers against conversion rates.
Thank you so much. Everyone, I really appreciate you guys joining us today. And please join me in thanking Mark and Ryth for your time today.
Yeah. Thank you, Mark.
Great. Really good. Good job.